Good morning, good afternoon, good evening, traders. Welcome back to the Market Manual, the place where traders sharpen their psychology, refine their strategy, and learn how to truly master the markets. In today's video, we are analyzing the market. We are doing a multi-time frame analysis for the week, which is week 30. Um, this video is sponsored by EXNESS, the broker I personally trust for low spreads, fast execution, and reliability. If you're looking for a trusted broker, whether you're a beginner or experienced trader, open your EXNESS account through my link below. It directly supports the channel and help us bring you more quality content. Let's begin. So let's start by analyzing Euro USD. Euro USD. Start by looking at our danger zones. Looking at our danger zones. We are marking our danger zones. A danger zone is where price is likely to reverse. This is the origin of the impulse move that price usually makes. As you all know, that price moves in impulses. Let's move to the daily time frame. In the daily time frame, you can see and danger zone over here. As you can all see, when we move from the weekly, price is bullish. It hasn't yet reached our danger zone here, which is our supply area, meaning it is still in a bullish momentum. It is still safe for us to look for bullish opportunities. Also in the daily time frame, we can see price made a high, higher low, higher high, and a higher low over here. So we are now waiting for price to create a new higher high and touch this area. So when you go to the H4 time frame, you can see that price in this area, it made a QMTR here. It was held by a QMTR. So now price has been bullish in this area, constantly creating higher highs, higher highs. So the next, okay, there's something here. There's something here. As you can see, guys, this is a high liquidity area. There's a lot of rejection around this area, and we can see here tries broke this resistance over here, and it created a new support, a new base, and it broke using this base. This base is the one that broke this area. So it broke it with the marrow candlestick. This is a strong confirmation that our setup is valid. So this is a setup code, and RRS. Resistance becomes support. Significant resistance becomes support. So our entry, okay. So as we can see here, there's a double marrow over here, double marrow king. And then we go to the lower time frame. You can see a bullish engulf with a strong momentum, showing us that there's a lot of liquidity here. Price is likely to come back in this area. And this is confirmation to us that our double marrow here is valid, because as you can see in the lower time frame, there is a bullish engulf. This is confirmation. Let me go to here. Okay, let's check H4. Also in the H4 time frame, we can see another confirmation. This is a bullish engulf to our setup, showing us that this is a valid setup. And this confirmation is it has a 80 to 90% win rate. So it's a very strong confirmation. That's why we use it. And every time price gives us this kind of confirmation, we usually risk more or take more trades. So as you can see, guys, and price is likely to come back. Is likely to come back to this area, it reverses here. So our entry, okay, let's first look at our confluences. Weekly time frame bullish, daily time frame bullish, H4 time frame bullish, H1 time frame bullish. Okay, this is our entry. Our stop loss would be somewhere around here. This is our stop loss area. This is our stop loss area. So price, this is the one. This is a 30 pip, 34 pip stop loss, and a take profit of 102, and that is 34 pip, and that is a 1:3 risk to reward, which is a good RR, guys. Let's move on to the next pair. Let's move on to the next pair, which is gold. Okay, gold. This. I'm making our danger zone. Danger zone. Danger zone. This is our danger zone. As you can see, price is in a bearish momentum. Bearish momentum. In the H4 time frame, you can also see that price is still bearish. It's still bearish. And let's look at the danger zones here. As you can see, guys, that price is in a bearish momentum. It is very bearish, creating lower lows. In the H1 time frame, price is still bearish. It is still bearish, and as you can see, it is losing momentum over here. And in price being bearish, it took out this supported demand area. And in our supported demand area, we can see there's a setup over here. Price broke this QML, broke this QML or ignored it, giving us a setup called a QMTR or IQM. And our entry you can see a shoulder, a high, a low, a low, a low. Price came back here, tried respecting the zone, but failed and ended up breaking. And our entry is this bearish engulf, bearish engulf. When we go to the day H1 time frame, you can see that price created a double maru here. There's a double maru over here, and also there is a bearish engulf over here. Bearish engulf, so price is likely to come here, and let's look for confirmation. As you can see, there is confirmation, a bearish engulf. This is bearish engulf type 3. Type 3. So this is a valid setup, a very valid setup. As you can also see that our confluence is very strong. The daily is bearish. H4 bearish. H1 bearish. 30 minutes is also bearish. So our entry will be at the second zone. Second and TP around this area. Yeah. Our stop loss is a 71 pip stop loss. So profit it's 35. 300, it's 357 or 360. So 71. Our R here is 1 is to 5. 1 is to 5 RR. So we're going to exercise this area and then continue and move it back to the downside. And let's move on to the next here, which is EuroCAD. This is our danger zone. And then to date, we can see another danger zone. Okay. And as you can see in the weekly, that price was held by this danger zone and it's in a bearish momentum. It's been making lower lows, lower lows, lower lows, or lower highs, lower highs. So let's go to the H4. In the H4 time frame, you can see that price reversed here with the QML. So now we're also seeing another QML, and this is what we call a QMC, QML continuation. This is another QML. When we go to the H1 time frame, we can see it clearly, and we can see bearish engulf. And for entries, guys, we use bearish engulf or bullish engulf patterns for entries. And this bearish engulf pattern is a strong, valid and bearish engulf because of this strong momentum trend is showing us that there's a lot of liquidity here, a lot of orders that have not been filled, and price is about price will fill them back when price comes back around this area. So a lot of orders are left by the big banks and hedge funds over here. So it will be filled and triggered. When we try to choose our zone, so as you can see, that's actually my pattern. And this is a fake out. Price is approaching our entry with a fake out, which is another confirmation of our QML. This is a late retest QML. So things to look out for in a late retest QML is such things as fake out, compression, CPLQ, you name it. So now let's look at our confirmation. As you can see, there's confirmation. Let's look at the daily. There's also confirmation, as you can see, but this is confirmation. Confirmation giving us a strong indication that price will move to the downside. So we can place our entries here confidently. Our take profit will be this area, this area, and this area over here. Those two areas, and our stop loss will be this area. From that area. And that's 26 pip stop loss. Take profit 105. Take profit 235. 235. The first take profit is a 1:4 RR. The 1:4 RR. The second is a 1:9 RR. So that's a good restore, guys. Very, very good. Very good restore. Let's move on to the next pair, which is GBP USD. With GBP USD, you can see danger zone, danger zone, danger zone. When we move to the daily time frame, you can see here. To the, as you can see that price touched our danger zone and was held by another danger zone. So now it's in a bullish momentum. It's in a bullish momentum. As you can see, it made a higher high, failed to create a lower low. So we are looking for another higher high now. This is a higher low. Move on to the H4 time frame. H4 time frame, you can see there is something. There's something over here. As you can see, cloud of making right? There's something over there. This is what we call an RRS setup, file setup. And here's our ngulf over here. Our ngulf. That's our ngulf. That's our ngulf. That's our ngulf. File is likely to come back here and push to the upside. Break this area. So as you can see, with our entry confirmation here, bullish engulf, as you can see. This is what we call a double narrow. So our entry is around this confluence, bullish, 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 bullish. It's bullish, bullish. Even the H1 time frame was showing us that it's bullish. So our entry, okay, take profit to this area. Let's go to this area. Our fresh supply zone and stop loss will be below the zone. Stop loss of 26 pips, and take profit of 111. And that's a 1 is to 4.5 RR, which is a very good RR, guys. That's it from us, guys. Till next week for this weekly analysis videos. Please don't forget to like, subscribe, and share this video, and leave comments on the comment section, and also leave suggestions on the type of content we should produce for you guys. And please don't forget, guys, for an FSCA regulated broker, if you need a broker, use the link below and sign up for EXNESS. Till next time, guys.